Welcome everyone to this video. We are going to discuss Meta and Apple's quarterly results. So briefly, executive summary. Both Meta and Apple released results towards the last week of April. Meta had revenue of 6.6%. They are facing a lot of headwinds that have got to do with monetization, increased competition and reduced ad demand. Net income was down 21%, and they were able to grow their daily active users and monthly active users by 4% and 3% respectively. The results for Apple, revenue was up 9% to $97 billion. All product categories beat expectations except for the wearables. March quarter revenue records were set for iPhone, Mac and wearables, and the results were impacted by constraints of supply, and net income was up 5.8%. So let's first start with Facebook's results. The revenue was up 6.6%, but this is a huge deceleration from the same quarter last year. This time last year, the revenue was up 44%, and the revenue deceleration is attributed to a slowdown in e-commerce after high growth during the pandemic, continued iOS headwinds, monetization headwinds with the short-term video, and increased competition with TikTok, who are stealing a lot of time in social media. And then the war in Ukraine has reduced the ad demand in Europe. The uncertain macroeconomic landscape has also starting to show that it's affecting advertisers' budgets. And then in addition to that, the stronger dollar was also a headwind. Costs and expenses were up 31%. So this caused operating margin to decrease from 43% to 31%. And then that filtered through to net income, which was down 21%, and earnings per share down 18%. The ad impressions increased 15%, but the average price per ad decreased by 8%. Overall, not the best set of results against a very strong prior period. Just on our valuation for Facebook, we're using a DCF. Our free cash flow estimates are slightly below consensus, given that we think that CapEx will be at the upper end of guidance. This is because they're increasing their investments into short-term video monetization, and also investments in building the metaverse is going to ramp up. We flex the most sensitive assumptions in our bull and bear case scenarios. This is our terminal EBIT multiple and the EBIT. Yeah, so although our calculations suggest there's upside, this is our quantitative view. Our qualitative view on Facebook kind of offsets this attractive valuation, and that leads us to a hold. Then we've got Apple's results. Revenue was up 9% to $97 billion. It was a beat on the top and the bottom line. iPhone sales were negatively impacted by the supply constraints, and that's going to continue into the next quarter. All product categories beat expectations except wearables, as I mentioned earlier. An all-time revenue record was set for services, and the installed base of active devices also reached an all-time record. The earnings call mostly focused on supply constraints, and one of the key takeaways from the earnings call was one of the analysts asked how the environment of inflation is going to impact spending levels, and the response was that Apple is much more concerned about the supply side than the demand side. So I took that as a positive takeaway, since the management seems to think that demand is robust, and that's very good for Apple. Cash from operations was 28 billion, and they also authorized an additional $90 billion in share buybacks. And then lastly, our valuation on Apple, it's quite a simple one. It's PE multiple and in the next 12 months of earnings. We adjust the PE multiple by weighting the traditional business with the services business, which has a much higher multiple. It's growing quite a lot, and it's got very high margins. So given the high quality of Apple, our recommendation is to hold it despite the weakness we've seen in the last week. So yeah, if you'd like to place a trade, please speak to your financial advisor or contact the dealing desk, and the report that we wrote can be found on MyBase. Please will you take note of the following disclaimer?
Thank you.